Things are looking very gloomy on Wall Street. The stage is set for a ruthless stock market crash. But everyone keeps denying that this gigantic bubble even exists. However, the ideal setup for a crash happens exactly when people are thinking that a crash is impossible. Of course, the market needs a good number of unsuspecting fools to keep fueling the final rally and add to the gains of the wealthy, while the minions are unexpectedly left empty-handed. Now, most investors are still believing that this time is different. Few are brave enough to come forward and warn that a massive crash is coming. The vast majority of warnings these days are carefully measured murmurings about an impending correction. But those are just euphemisms to signal to the smart ones that it's time to leave. That's what financial expert, economic analyst, writer, and former investor Charlie Hugh Smith has described in a series of articles published this month. The analyst argues that those who insist on denying the risks are making a deliberate choice not to be honest, because in that way they can lure more puppets to fuel the bubble to its highest point. On the other hand, those who have made great fortunes in previous booms know this peak only lasts for a second, and they know precisely when it's time to go. That's why he is stepping forward to call for a rip your face off, weeping bitter tears over the grave of the speculative wealth that you thought was forever type of crash. All those buying the dip because the Fed will never let the market go down will be crushed like scurrying cockroaches, and all those trying to rotate into the next hot sector or asset class will also be crushed like scurrying cockroaches, because when the everything bubble pops, well, everything pops. There is no shelter in a risk-off cascade, Smith stresses. The coming stock market crash will be a result of several mutually reinforcing dynamics, starting with the widespread illusion that everything is just fine and there's nothing to worry about in the near term. However, there are many determinants that could end up being casual triggers of the next cascading Wall Street crash. As Smith notes, nothing can support the blind confidence in the idea that extremes of overvaluation, leverage, euphoria, and speculation will last forever, or even for much longer. We're well past that benchmark into unprecedented insanity, he says. The only possible outcome from now on is the collapse. The entire market has already reached its peak. On August 13th, the Dow topped out. September 2nd, S&P 500 topped out. And on September 7th, the Nasdaq topped out. Now, the big guys are just enjoying the last moments to reap their colossal gains before everything implodes. But no one is talking about that. No one is exposing what is truly happening. The Fed keeps refusing to admit that a financial meltdown of epic proportions is looming on the horizon. But they know that it is coming, because they were the ones who enabled the formation of the biggest financial bubble in history. At this point, as the expert describes, the credibility of the Federal Reserve is already in the dumpster, which just caught fire. The Fed is corrupt on multiple levels. This is finally being exposed because even the billionaire-owned corporate media is now fearful of losing whatever fragments of credibility they still have by refusing to acknowledge Fed corruption. The consequences of over a year of reckless policies are now emerging, and they look very ugly. As the economy slumps, inflation soars, and all sorts of distortions are threatening to push the markets down. Politicians and policymakers' utter and complete incompetence can no longer be bottled up. The rocket of inflation has just been ignited, and now the Fed is watching it spiraling out of control with its hands tied, since it's missed the opportunity to avert a financial disaster by reducing stimulus a year ago. The big problem is that inflation is not only our problem, it's a global one. Natural gas prices are skyrocketing and causing devastating energy crises around the world. Prices could triple without breaking a sweat at this point. At the same time, the cost of essentials is going through the roof. Millions upon millions of people are simply losing their ability to afford their basic needs. The recipe of a slowing economy plus uncontrolled inflation is what crushes risky speculative markets like this. On top of all that, the Fed has lost control of yields. Trust in the Fed's godlike powers is wavering as punters and players realize the Fed's shuck and jive has finally lost its power to wow the greedy and the credulous. And rising yields also crush risky speculative markets like this, said Smith. To make things worse, the timing is not the best for global markets. When the stock market starts to collapse, it will cause ripple effects all over the globe, and this time around, China will not come to the rescue. The Chinese government is desperately trying to avert a generalized default crisis as one of its biggest property developers goes bankrupt. And a catastrophic power shortage is only adding fuel to the fire as thousands of Chinese factories are having to halt operations, which is significantly reducing output and compromising seriously the country's growth. Needless to say, none of this will end well. Even though it's remarkably easy to be carried away by a bubble mania, it's remarkably difficult to open your eyes to the bubble's inevitable collapse. But this game has always existed on Wall Street. As the financial analyst explains, the big guys see that the top traders are in, and in order to sell all their shares, they need to recruit a bunch of bag holders to buy their shares and hold them all the way down. Once the catastrophic losses have been taken by the bag holders, then the wealthy controllers of the market slowly build up their positions amidst the wreckage. To become a bag holder, all you need is to believe in what the controllers are telling you about the market. They want you to believe that you will be like them so that they get your money on the way out. They always say things like, "The Fed has our back. The Fed will never let stocks go down, so there's no risk in buying more shares today." Or they say innovation stocks can only go higher as they create new industries that are the future of the economy. Or they say institutional buyers are coming in and that means prices can only go higher. Or this is a new era, old measures of valuation no longer matter. Or over time, stocks only go higher, so buy and hold is the winning strategy. But ladies and gentlemen, these are all lies. Wall Street titans always fund researchers claiming that the forward price-earnings ratio of 21.1 will only slightly exceed past norms and so on. They want you to believe that if they don't call the bubble a bubble, it won't pop. However, every single speculative mania that ever occurred in the history of the world ended in a burst, even when no one called the mania a bubble. What differentiates this bubble from the 1720 South Seas bubble, the 2000 dot-com bubble, or the 2007 to 2008 housing bubble is this. This bubble includes every asset class and has sucked the entire populace and economy into its magic maw, Smith wrote, adding that The bubble has swept up housing, stocks, junk bonds, commodities, cryptocurrencies, NFTs, and numerous collectibles. The bulk of America's household assets are now firmly lodged in the maw of the everything bubble. Another different aspect from previous downturns is that today's everything bubble has no limits. Most inflated assets are non-fungible tokens, and these have no boundaries. An NFT can represent a meme, a rock, a photo, chipped glass, whatever, and there are simply no limits on how many NFTs can be originated. You know, it's not surprising that during this unprecedented rally, a significant percentage of Americans have bought NFTs, thinking that they were legitimate investments such as growth stocks, bonds, or even housing. The only problem with the "if we don't call the bubble a bubble, it won't pop" mantra is that it has an expiration date, the expert warns. Human greed is unlimited. The number of currency units that can be issued by central banks is unlimited. The number of NFTs that can be originated is unlimited, and magical thinking has no limits. But enough of the assets being inflated in the everything bubble have faint ties back to the real world, such that the distortions in the imaginary world of infinite wealth end up distorting the real world, which is much less forgiving than the imaginary one, Smith cautions. At this stage, the retail so-called bag holders are going all in, or as the analyst puts it, the buy the dip crowd has been so well trained that they will provide the necessary buying to keep the cascade from gathering too much momentum. Now we're witnessing the final rally that is going to close this quarter on a positive note to make it look like everything is still right on track. However, as the retail crowd pours more cash into the everything bubble than they did in the past decade or two, the elites controlling the market have initiated their sell-off on the side while repositioning themselves to profit from the decline. Charlie Hugh Smith warns, this is, of course, the most reliable signal that the bubble is about to pop. Although the full impact of the consequences can take some time to arise, the delay only deteriorates the foundations of the market even further, and that will only amplify the depth of the coming stock market crash. Smith reminds us that America's corrupt elite is failing to assess the devastating outcome of their monstrous wealth, skyrocketing inequality. And as a result, they're blind to what will wash away their putrid palace, for inequality is a systemic toxin that brings down even the greatest empires, he wrote. Dear corrupt Fed and corrupt ruling elite, the banquet of consequences is being served, and risk-off crashes are, like revenge, best served cold, the expert concludes. While the cowards are setting things up to take everything from us once again, the voices of the brave ones are being silenced amid this frenzied crowd. The stock market crash that nobody thinks is possible is right at the corner, and it will spark a catastrophe that will mark the beginning of the end. If you enjoyed this video, we would like to recommend Charlie Hugh Smith's latest book, Will You Be Richer or Poorer? Profit, Power, and AI in a Traumatized World. It's now available on Amazon. In the meantime, don't forget to leave a thumbs up and please subscribe to our channel to keep updated with future videos. Thank you very much for watching. We'll see you on the next one.